I guess the shortest time frame I give is maybe 2 years. I'm saying, okay, I'm bullish on Bitcoin with a 2-year view. But more realistically, I look out several years and say, well, I think global liquidity is going to be higher years from now. I think Bitcoin's going to be higher.
The price of Bitcoin dropped significantly on Sunday, first falling below 60,000 and then at one point reaching 58,315 as well. It had hit a high of 61,868 earlier in the day before this occurred. The value of the entire cryptocurrency market fell to 2.06 trillion, a 3.18% reduction in just the last day. In the same time frame, the value of Bitcoin fell by 3.8%. This market volatility has sparked different reactions among crypto enthusiasts. In an interview with podcaster Peter McCormick, investment expert Lyn Alden discussed the volatility, liquidity, and role of Bitcoin in times of crisis, highlighting the cryptocurrency's long-term potential as a solution rather than a form of protection. According to Lyn Alden, the population's deeper discontent was exposed when Chile's minor rise in train prices triggered widespread protests. She made the point that, in a similar vein, people's discretionary income had been stagnating or falling over the previous 10 years in the US, whilst in the UK and other regions of Europe, which had resulted in sentiments of economic insecurity.
Some years ago in Chile, they had massive protests. There were the trigger was basically like train prices went up by like a nickel.
I was there.
But of course, yeah. So you were okay. So it wasn't the nickel.
Yeah.
It wasn't the nickel that did it. The nickel was this catalyst for accumulated frustrations that people had, and that's I think what we're seeing now in some developed countries. We're seeing it in the United States. We're seeing it in the UK. We're seeing it in parts of continental Europe, and basically, there was this chart I saw. It was Michael Green that shared it. Basically, it's like it was America, but it was like real disposable income after shelter, food, transportation, and all this. And it shows that ever since about the past 10 years or so, it's been going kind of sideways to down. Most people's everyday experience of affordability and quality of life it went from structurally improving to not really doing great. In addition, in the United States, it's kind of the first period of time where life expectancy is actually going down. To some extent, which is a really bad sign. UK is in a similar position to the US where you have trade deficits. So you've had a little bit of hollowing out of your industrial base, which you've kind of observed that as well. It's just kind of like industrial towns on harder time, working class. So it's a similar position as the United States. And so people increasingly sense that something's wrong. They're not really sure what it is. They're not really sure what mechanisms are there. And then you get more distrust in institutions. So both the US and the UK and elsewhere, people that say, I think government's doing a good job, or I think the media is doing fair reporting, or I trust medical authorities, or I trust, whatever the case may be. Across the board, that trust is generally declining to fairly very low levels. More polarization, more frustration build up, economic frustration, and then you have very real policies that do people do have rightly criticism of, like how immigration's good, but if you immigrate a ton of people all at once and there's a lack of assimilation, people can I think rightfully get concerned about that to some extent, and of course it can be taken out in harmful ways. But then people start debating, well, what's going on socially while all these other economic things are happening, and then people can unfortunately take it out in violence and hate when it's some of these problems are very hard to solve. And I tie a lot of it back to broken money, not everything. But if you kind of catalog over time, over decades, as a species, we consume more energy per capita, so that's good. Our technology is way better than it was years ago. Some of it's actually got harmful effects, but either way, we at least have better technology than we once did. But our money's worse than it was a while ago, especially if you're outside of these major countries. But in general, money's bad. It's like that one area where technology's not really made it better. And it causes all these imbalances and all these one part of the economy gets hollowed out, and this other thing has this unfair advantage, and then it kind of rotates, and people these big forces happen around them, and they don't really know how to frame it, how to contextualize it, It's much harder to have debates over fiscal policy than it is to have over social war stuff. So when the fiscal policy or just the overall economic situation, when that gets messier, fewer people are able to articulate it. And so they articulate it in more visible ways, more social ways. That's where a lot of that anger gets expressed a lot of the time. Again, there's a lot of, it's broken money. I also think it's broken energy policy, right? That, a number of countries have not managed their energy well. They get into this like mindset that like the only thing matters is, say, carbon emissions, right? They try to quantify everything by one number. Most people, if you ask, do you want to keep the environment healthy around you? Do you want to have clean air and fresh water? And of course, but then so many politicians put it into one number, and then they'll base all this energy policy around one number. And at the end of the day, if people, if their energy costs are going up, if their real standard of living is running into frictions, that's when they're willing to take it out.
According to Lyn Alden, Bitcoin is a safe choice in times of crisis, since it provides liquidity around the clock. Its price fluctuates, and its perceived riskiness is not always established. Since Bitcoin is still relatively new and has little market knowledge, its value frequently increases during times of crisis. Alden distinguished between crises that support or oppose liquidity, pointing out that most crises are against liquidity and initially result in the selling of Bitcoin. She used the 2023 American regional bank crisis, where Bitcoin fared well following the initial shock. To illustrate a pro-liquidity catastrophe, Alden stressed that the value of Bitcoin should be assessed every 4 years, as it is a long-term investment that acts as a solution rather than a hedge. She added that the value of Bitcoin might fluctuate based on the currency, with Japanese investors profiting from its increase in value in relation to the yen.
One is, Bitcoin provides 24/7 liquidity. So on a Sunday night in America time, while Japanese Monday morning, while they're blowing up, the safety option is that if you hold Bitcoin, you have 24/7 liquidity if you need it or want it, which you don't have with almost any other asset. The downside is in terms of price, it's not great for those that are still holding. It is good for those that like to buy dips. I generally don't view Bitcoin as being a risk-off asset in the way that portfolio people would think about it, meaning that price normally goes up during crises, because it's still not well understood. It's still, it's just sometimes there's leverage in the space. One thing I point out is that there's like pro-liquidity crises, and then there's anti-liquidity crises. Most crises are anti-liquidity, which is to say that Bitcoin's biggest correlation from what I found is liquidity. And when a crisis breaks out, normally it's not good for liquidity. And so Bitcoin is going to be one of the first things sold, especially because it's like that phrase, you sell what you have to, not what you want to, especially if we're talking about a 24/7 market on a weekend. As long as Bitcoin has upward volatility, which you want it to have because we want it to get much larger, that's going to come with periods of downside volatility. And then as long as it has both upside and downside volatility in large amounts, people are going to often treat it like a risk asset until it kind of reaches some much larger, more distributed, steady state, or at least, like kind of gold-like in size. An example of a pro-liquidity crisis was ironically the 2023 American regional bank crisis. So Bitcoin performed poorly in, say, late February and early March, because that's where actually liquidity was worsening under the surface. But when the crisis actually hit, Bitcoin did well. And that's because the market immediately realized, the Fed and Treasury are going to provide liquidity. Things broke, and they kind of knew that that's something they had to respond to, and they did. And so Bitcoin did quite well after some hours. It actually did quite well pretty quickly, because that was a pro-liquidity crisis. Things like the COVID crash, or things like this dislocation we just saw, these are generally anti-liquidity events. So we should not expect Bitcoin to do particularly well during them. It still serves its function of giving people 24/7 liquidity should they need it or want it. But I think it's more like, and I think Parker Lewis has said this, it's not a hedge, it's a solution in the sense that this is an alternative system that's being built. And so I wouldn't think of Bitcoin in anything less than like 4-year increments, because it's a structural, as long as the thesis is correct, it's a structural growth story. But one that is likely to be sold during most, negative liquidity crises.
So you're buying for problems 4 years down the line.
Yeah, and you're buying a solution for, like, if money's broken, you buy the least broken money, buy the good money. You try to build, systems. Like, when people ask me, what do you think about this recent Bitcoin price drop? And, like, my answer is, like, I hold keys in geographically separated areas. I invest in venture, with Ego Death Capital for, like, decade-long, like, intended timelines. That's the kind of the time frame I'm thinking of when it comes to Bitcoin. And I generally warn that in any sort of intermediate term sense, Bitcoin is highly correlated with liquidity, does not do well usually during bad liquidity environments. The last few years, as good as Bitcoin was in dollar terms, it was even better in yen terms. If you're a Japanese person holding Bitcoin, you're like a king or a queen relative to what most people around you are experiencing. If we get that other type of rotation, you could have a similar thing. So I'm quite bullish on Bitcoin. With, I guess, the shortest time frame I give is maybe 2 years. I'm saying, okay, I'm bullish on Bitcoin with a 2-year view. But more realistically, I look out several years and say, well, I think global liquidity is going to be higher years from now. I think Bitcoin's going to be higher. But I don't expect it to be a risk-off play in the price sense, unless a particular crisis happens to be one of the fairly uncommon pro-liquidity crises.
Although the volume of cryptocurrency traded globally increased by 7.53% from the day before, it was still less than the week before. With this most recent decline, the value of Bitcoin relative to the US dollar has dropped by 13.9% in the past 2 weeks. Ethereum too saw a decline, going from 2,720 to 2,540. Significant losses, ranging from 573% to 7.5%, were also seen by other popular cryptocurrencies such as Solana, XRP, and Toncoin. Many traders experienced large losses in the futures of cryptocurrency markets. A total of $132.49 million was lost when the positions of 54,744 traders were liquidated. The traders who had gambled on rising prices accounted for $102.33 million of the losses, mostly due to long positions. Of those losses, $25.95 million came from trades in Bitcoin, while $22.84 million came from long positions in Ethereum. On Sunday, long liquidations in Solana totaled $8.37 million. The biggest loss was on OKEx, where an Ethereum deal cost $2.17 million. The difficult circumstances of traders were brought on by the volatile market and increased selling pressure. Lyn Alden noted that the public's level of divisiveness, frustration, and trust in institutions had all increased and blamed these problems on broken money, a financial system that had not kept up with the development of technology. Alden also attacked incorrect energy policies and focused on a single statistic, such as carbon emissions, which could increase energy bills and lower living standards. Escalating public unrest. Like and subscribe to bring good luck and blessings for your financial future and get this crypto bull run going.